Welcome to your daily dose of dividend. Louise made a request in the comments for Grainger. Let's take a look. With a market cap of $25 billion, Grainger is in the industrial distribution industry. Over the last 10 years, they have actually underperformed the S&P 500 with its dividend reinvested. The sales growth has been quite nice, 5.10%, and this is data from the last 5 years. Same with the earnings growth, very nice, 15.1%. And the earnings estimates are also quite high, 14.4%. The return on capital is very nice, 19.3%. And here we want return of capital above 12%. So it hits the check mark fine here. The debt compared to its free cash flow is 4 years. It's a bit high, but still under the threshold of 5 years. And it's buying back shares quite a lot, so that's a big check mark here. Now for some dividend metrics. Dividend yield is only 1.4%, so room for improvement here. That's an X. And we can see that the payout ratio is only about 29%, so they indeed have room to improve their dividend. The growth rate is quite slow though, 5.9%, so barely a check mark here. But they have increased their dividend for 52 consecutive years, so they're a dividend king. Check mark here. That gives Grainger 9 out of 10 points. So if you don't have Grainger in your dividend portfolio, you might want to evaluate it further. From gurufocus.com, we can see that valuation-wise, Grainger is fairly valued right now, compared to its historical values and also some future estimates. What's you guys thought on Grainger in a dividend portfolio? Let's also take a brief look in FastGraph for current valuation and for analyst estimates. Here we can see that Grainger is actually a bit cyclical, but overall it has very nice earnings growth rate of 12.3% if we look back to 2002. There are some ups and downs, and actually quite a lot of years where they have negative earnings, but then it spiked again. So maybe they did some restructuring of the company, have to dig a bit deeper. If we go in the forecasting tab, and I like to do estimates based on the last 10 years, and here we can also see that the PE is actually not that different depending on 5 years, 10 years or 15 years. It seems to be around 20. And we can see that there are quite a lot of analysts, and we have some projection out to 2025. And if Grainger keeps on its strong earnings, we can actually expect a total annual rate of return of 14.2%. So that's quite high. Usually say that the S&P returns about 10% on average annually. So that's Grainger. Hope you guys liked it. If you have another request, just post it in the comments, and see you next time, guys. Bye.